One of the disruptive companies in the financial technology industry is Robinhood. It's really fun to watch them. And it's great that they came into the industry and forced everybody to have zero cost trades. That is great. And they continue to push the envelope and really focus and obsess on the customer and provide financial products and services that really fit the times. So great job, Robinhood. My name is Victor. I'm a value investor. I'm an MBA and I have a lot of business experience. I try to put that experience to use as I analyze companies like Robinhood, and then I share that analysis on YouTube. Do me a big favor and like my video and subscribe to my channel if you want to see videos like this. Let me go into Robinhood and share with you my analysis. I have a consistent process when it comes to my investing. It follows four key questions, followed by the decision to buy, hold, or sell. First, do I want to be part owner in this company? Do I like the industry? Do I think the company is operating well? Basically, is management doing a good job? Is debt under control and less than 3x EBITDA? And I want to discount on the stock. At the end of the day, I want to make money. If I get a discount on the front end, I can see that stock price rise over time. Based on the answers to those questions, I buy, hold, or sell. In the new connected world where you have a lot of social apps and people grew up with really computers and phones in their hands, there's just a different expectations in financial services. It's not like, when I was a kid, geez, everything was, done through the mail. If you invested in something, you'd get a statement at the end of the month over the mail. But now really it's about, information is real time and people really want to be involved in their investments. So Robinhood, I think, fits the times and fits that category of investor that is really very modern, very capable of getting their information, trading in investments that are non-traditional. So I really like that Robinhood is filling that gap that the traditional financial services companies really can't really fit. So the future of Robinhood, I think, is either they're going to be a good sized financial services company, but really, I think they're going to be acquired. I would think that one of the traditional firms is going to say, Robinhood really knows what they're doing to get the younger, younger aged investor. And one of these bigger firms is likely going to acquire Robinhood. And that would be a good thing for the current stockholders because we'd be paid a premium. So I like their story. I like that they're different. It's not just another financial services company. These guys think different. They're innovative. And I like that about them. This is an industry that tends to be profitable. The winners make a lot of money. And Robinhood, as I'm going to show you in a few slides, is making money, is producing free cash flow. So I like the company. I like the industry. What's working for Robinhood is that they continue to push the envelope. I mentioned that they force the industry to have zero cost trades, but now they're offering a high yield savings account, which I'm sure a lot of people appreciate. And I've heard, people that are, 40, 50 plus say they're going to Robinhood because of that savings. A 4.65 is really good. And you can, put the money in, take the money out. It's not like a CD that you have to tie up the money for a while. So they're really pushing the envelope on products and they obsess on the customer. That's a really good recipe. I think businesses that really obsess on the customer and really drive their behavior based on what's good for that customer, in the end, those are the companies that really succeed. So that's what's working for Robinhood. Robinhood announced their earnings last week, and I'm taking a look at their income statement. The good news is they're growing their revenue, which is really good to see. And the one thing that I did not like is they're issuing out new shares. So when they issue out more shares, that makes each share less valuable. So it'd be good to see them stop issuing, more shares and stabilize at some point, begin to buy back shares. But it's good to see that revenues have grown. The balance sheet's in great condition, principally because they have zero debt and they have a lot of cash. So that makes the balance sheet pretty healthy. The statement of cash flow for Robinhood looks great. Last year, for the first 6 months from operations, they had a negative 826 million. But this year, first 6 months from operations, they generated $1.2 billion of cash flow from operations. Just a phenomenal rise in cash flow. It's almost a $2 billion swing. Now, they don't have to spend a lot of capital in this type of business. This is more of a intellectual property, creative company. So it's great to see them produce free cash flow, and it could really grow from this point. I believe Robinhood is currently discounted at 62%. I believe their share price is valued, or I should say that the value per share is $18.31. But right now it's priced and the market is selling their stock at $11.28. Now I get there using two methods. One is I discount their free cash flows, and two, I'm taking a 10 times sales multiplier and achieving a number there that I'm comfortable with. Let me take you first through the discounted free cash flows. My estimate of cash flow is going to be a very conservative one. I'm saying that, hey, as a starting point, they're going to generate $450 million of free cash flow. I just showed in this slide previously, for 6 months, they generated $1.2 billion of free cash. So it's a nice conservative number. And I'm going to grow it, somewhat aggressively at 25%, but I believe they're going to do that. Then after that, we'll grow it, less aggressively at 4%. The cash flows that I expect in the future are here, first 4 years, and then every cash flow after year 4 is in this bucket. Those cash flows discounted at 11%, which is a nice conservative weighted average cost of capital, gets us to a value of all those cash flows of $9.7 billion. They have $5.8 billion on the balance sheet, so their equity value is $15.5 billion. Their market cap is $9.7 billion. So it offers up a 52% discount using the free cash flow method. Now, the 10 times sales value method is really something that I am comfortable with. And what I'm looking at is their overall sales are $1.8 billion, and they continue to grow very well. Well, how much would you pay for those sales? How much would an acquiring company pay for those sales? And typically they pay about 10 times sales. So that's why I use 10 times. And if I use that as a valuation, I get $20 per share. I bring that over here, and that would represent an 82% premium, a discount, that you would have on the stock price. Meaning, if you just do 10 times sales, somebody would pay $20.53 for Robinhood, but they're currently trading on the market for $11.28. So I combine the two. I take more weight in the free cash flow method and combine the sales value method. And I get 62% is the discount on Robinhood. Again, taking 2 parts free cash flow method, 1 part sales value method. So revisiting the scorecard, I definitely want to be an owner of Robinhood. I just love their creativity. They're a disruptor. Love that about them. And I think they're in a category of the industry that could really be high growth and very profitable and produce high cash flow. The team here is, I wouldn't want anybody else running Robinhood. I just think very highly of them. Debt, they don't have any debt, so that's under control. And there's a discount available on Robinhood stock. So I'm buying more shares. I have a small position in Robinhood, but I'm going to continue to buy additional shares and build up that position. Taking a look at where the stock's traded in the last couple of years, they IPO'd in the 2022 timeframe. And boy, they came out and the stock price really went up. It went above $50 per share, but it really dropped and went into 2022 is really losing a lot of its value. Geez, over 80% of its value. But, the stock price isn't the company, and the company isn't the stock price. And this company continues to grow. It continues to really produce a service, a product that really customers really like. So there's value here. If you compare the value per share that I believe the company's worth, which is $18.31, they're currently trading at $11.28. So there's value between the two prices. The stock is up 64%. So a lot of people are buying into the story of Robinhood. And again, I'm buying additional shares, especially on down days of Robinhood. Hey, thank you for watching the video. I really appreciate it. I hope you found it interesting. Do me a favor and like that video. Really would help my channel out. And subscribe to the channel. You would see the other videos. You'd get reminders of when I crank out a new video. Again, thank you for watching. Good luck investing in 2023.